to the channel. Today we're going to talk about how you as an investor can prepare for quarterly earnings reports from your investor companies or companies that you're looking to invest in, right? So before we begin, I think it's good to know exactly what are earnings report, right? So basically, a company listed in the US stock exchange will report earnings 4 times a year. So basically every quarter or every 3 months, right? So this earnings report in its most bare bone format, which is the Form 10Q, will be uploaded onto the SEC's website. So you can actually go on to SEC's website and search for the company that you are potentially looking into or already invested in, and just download the report and analyze it. And what's in this Form 10Q, right? Is basically the financial statements of the company, right, which includes the income statement, cash flow statement, and the balance sheet. It also may include the management's discussion and analysis of the company, including the risk disclosures that the company may be facing, for example, market risk, regulatory risk, competition risk, things like that. They will be discussed over there as well. Any internal controls, for example, finance, legal, things like that the investors should be wary of or know of, right? And maybe any other information, right? Like, for example, any legal lawsuits, any stock sales by the management, the founders, etc., over the past quarter, or any significant events that occurred during the quarter that the investors should know, right? And also, quarterly reports and any other additional details are usually uploaded onto the company's website themselves, right, under the investor relations segment, right? So, for example, taking a look at Hims and Hers investors relation, right, they will give you a press release of the earnings, right? So basically a summarized version of what the investors should know that happened to Hims over the past quarter. Earnings webcast, which is basically a live call where the management team will address any questions by the analysts for about things that have happened in the quarter, or anything that the analysts have questions about the company for, right? Earnings transcript, basically just a transcript of whatever happened during the earnings call. Earnings presentation slides during the earnings call itself, the companies would first present using this presentation deck to disclose and inform the investors about what happened during the quarter, any shareholder letter. But usually I think the amount of information presented here may vary from company to company, but usually the press release is a must-have, right? And also the Form 10Q, which you can find on the SEC's website, right? So how as an investor should you prepare or analyze the quarterly reports? So number one is to know when the company is reporting, right? So do not be negligent. Do your diligence, understand when your company is reporting, so you don't get caught up by extreme price shocks or volatility or movement that may usually be present during earnings season, right? Especially if the company that's reporting is a growth company. Usually you can see up to moves up to 20% or even higher, 30%. Either the upside or downside because of earnings report, right? So to know exactly when your company is reporting, StockPenguins actually has an earnings calendar too, right? That you can see week to week when does the company perform, right? So, and you can even search for the company that that you invested in, for example, JP Morgan. It will show when was the previous earnings, right? How they perform, and also when is the upcoming earnings from now. So it actually shows you how many days from now that the company will be reporting, right? Number two, know the company's historical performance in beating analyst targets. So this will give you a sense of what to expect usually during earnings season, right? So if a company consistently underperforms during earnings season, I think it shows that the management of the company may be in question, right? Because they're not running a company, but they're constantly missing targets. And also, it may just give you a sense that the company by itself isn't a very high quality company, given the fact that it continues to keep missing targets, right? It's not meeting expectations of everyone. Either that, or also the company may just be overselling themselves too heavily, which is why analysts are projecting very strong earnings from them. But that's usually, and then actually the case they're not reporting as well that well. So conversely, you should always look for companies that outperform expectations, right? It shows cases that the company is always delivering, the management is always delivering, and it's just a good thing whenever the company consistently outperforms. So for StockPenguins.com's earning calendar too, you can see that we have provided information on up to 10 years, right, about the company's track records in beating EPS and revenue. So for example, JP Morgan just last week reported earnings, right? Its EPS, actual earnings per share reported, was $5.07, which beat the estimates of $4.85, right? So it's a good beat. And you can see that consistently over the past year, JP Morgan has been beating as well. So this is a sign that this company is very well run, strong management team, and overall a good company, right? And number 3 is to always read the company's earnings call transcript, right? So it gives you a sense of how the company tackles and reassures analyst questions, right? So usually analysts could be very critical. They're doing all the thinking for the investors and bringing up any shortcomings or any downsides that the company has to address, any risk, right? Then knowing how the company tackles and addresses this question and reassures everyone will give you a sense of the management's confidence going forward as well, and also about how well they know the whole industry as a whole, right? So if the company is very good at tackling questions, it may prove that the company's management is very solid, right? And usually the earnings transcript will also show how the company is guiding towards competition, future growth prospect, things like that. So it's very important to understand what the management's thoughts are on the company itself, and the analyst asking the questions, right? So both the analyst and the management knows the company the best and the industry the best. So you as an investor, you should also try to learn from them, whatever they're saying, and then do your own critical and judgment and analysis of the company, right? Number 4, the financial results itself. So usually, right, because of how transparent information is today, this is usually priced in a way. So what is most important, right, is going ahead. So future earnings guidance, right? Is it raised to the upside? So this is usually a good sign the company is actually performing better than even the management expects, right? And if it's we lowered to the downside, right? This probably is because of any potential issues that the company may be facing, some form of regulatory issues that stops them from growing as fast, right? Any competition out there. So they will flag out any issues, and usually this will cause the shares to sell down, right? Especially if the company in question is a tech company. And did the earnings miss or beat heavily, right? So usually if expectations are met, it wouldn't really mean much, right? Because it's everyone's expectations are aligned about the company. So if it missed or beat heavily to the upside or downside, it creates a shock factor that may move share price quite heavily on the day of earnings itself, right? And also, as mentioned, management plans going forward, product announcements that may get investors excited. So I think particularly for the case of growth companies, right, usually the companies may use this opportunity, right, to announce something that they've been working on or going to release in the future, right? So this may or may not divert the attention from bad financial performance of that particular quarter. So for example, some growth companies may announce like, oh, we have a new product coming up and this is going to capture a lot more market share. So all these are just promises for now, but it will just divert the everyone's attention from there, and just move the attention away. And even though that the earnings may be bad, right, it miss expectations, this may cause the stock price to go up as well, right? But I think this also ultimately depends on the market climate now. So is there a focus on earnings? So for example, when times are bad, right, people flock towards quality, and if the company they're invested in are not really showing the prospects, right, the growth that warrants the PE ratio, right, it may cause the company's share price to tank. Or if there's a current focus on the future, for example, maybe over the past few years, there was a lot of AI related focus, right? So as long as the company may release some form of AI plans or getting traction in the AI space or integrating them into their current product suite and services, it may cause the share price to go up, even though underlying performance of the company itself may not be as good, right? So so that's one thing to note. You can always go to use StockPenguins company financial tools and take a look at the earnings call transcript, right, and understand what's happening with the company. As mentioned, we also got the historical earnings performance tool over here as well. So and I think another thing to note is if you're listening in on the call, it's very important to understand the tone and style of the management, right? Do they always under promise, over deliver, or over promise and sometimes under deliver? So that's the thing to note as well. But I think ultimately at the end of the day, different types of companies in different growth stages would have investors focusing on different aspects of things they're looking out for in the earnings call. earnings result. And also wanted to add one more, which is the different investing environment. So as I mentioned earlier, if liquidity is in abundance, everyone's bullish, they probably look for growth prospects more. But in the case where the economy is bad, there's low liquidity, right? There will be a focus on quality instead, and then that's where the cash flow profitability aspects get the importance instead. So, for example, right, for growth companies, investors will be looking for a path towards profitability when things are starting to look a bit shaky, right? So there's a less focus on future growth prospects, but actually a path towards profitability instead. So if a growth company is not showing that, it may cause the share price to sell down. I think this was the case back in 2022 and 2023, where there was a lot of focus on profitability for all these growth companies, right? After the COVID boom, right? So those companies that do not show profitability, they're probably still trading at share prices way down from how they were traded at during the post-COVID highs, right? Even up to today, where the overall index have already been trading at all-time highs, right? And for example, another example is for companies in turnaround, right? So for example, your legacy names like Intel, right? There's a lot of talk about them not having the growth factor and quality in their product anymore to compete with companies like AMD and Nvidia. So if there is a resurgence in growth, right, you're seeing that the revenue growth starts to grow again, and you're seeing that the management has released a lot of new products that could compete with Nvidia's and AMD's. So this may cause the share price to continue growing up, right? So ultimately, the earnings report, whatever they're gonna say on the day itself, they're gonna disclose. It's not something that you could just know unless you're like an insider, right? So always use the past earnings report as a guide to intellectually guess the performance going ahead. So that's all for today. Thank you.